Hello everyone, welcome back to FX Capital Analysis for week 35. For the next week, we will start with our top pair and followed by our wildcard. First pair, we will start with Australian dollar, New Zealand dollar. For Australian dollar, New Zealand dollar, for high time frame, we will start with this time frame. We can see the price already break descending channel, and this is our minimum target. This is our second minimum target. You can see this is a very clean structure approaching the 90% rules. If we zoom into 1 hour time frame, you can see price start to create bull flag structure. So for this pair, on this kind of situation, structure price already moved down, come back up and move down again. This is our minimum or our trend line that we indicate price will pull back to the upside. So when the price approaching this line, there's a possibility price to move to the outside, but there's a possibility price to move to the downside once again and move to the outside. But I will set a entry order from this point and move to the upside. So the entry price will be this area and stop loss towards the structure, below the structure. So it's around 27 pips. So this will be the minimum target that we set at 90% rules. So we about 12.5%. So that's all for this pair. We move the second pair is Canadian dollar, Swiss franc. For this pair, you can see at high time frame, price break the structure, create a correction, pull back up, and come back up once again. So what we expect price to move down once again towards this 90% rules of this ascending channel. We zoom in 1 hour time frame. Price create very clean rising wedge for the one touch, second touch, and the third touch. So as we pop out one red line from here, we expect price to pull back from here and sell off. But we must remember this is a valid trade, so there's a high possibility that price will move to the upward. But in my previous experience in valid trade, you need to be careful and be ready to take 1% loss or break even. So I will set an entry order within this double top and sell off from here. This will be the minimum target, but in high time frame we understand that our minimum target will be here. So there's a possibility price to move downward, about 22%. So in this pair we need to manage correctly because it's a valid trade. So the way I move my stop loss to break even and trailing my stop loss, I will be little bit aggressive, but within my plan, which is I will move the stop loss after price create another structure or correction towards downward. Next, we move the third pair. High time frame is gold. For gold market, you can see price already moved back up and price has possibility to move downward. Even though we understand that USD strength not really going to happen in past few weeks, past few next week. So but we ready to approach gold, which is we understand price of USD will be get weaker in past few weeks. So we zoom in gold in 1 hour time frame. if you study this price action, price already moved to the was price impulse downward, create a correction, impulse again, which is continuation pattern, and impulse once again, create another continuation correction, and we expect price to move downward. So you see the real situation in here. Price, how are you going to approach this? If we count the pips from here, it's about 56. So I'm not going to take this as a reduced risk entry. I will approach this as a risk entry. Price around here, I set my entry order, set my alert. After 1 hour retracement candle, I will sell off from here. If price move back up, I will set another point in here. Price move upward, and I will sell off from here. So that's the two possibility. I'm going to approach gold pair. Remember, this is high probability area. You need to be extra careful within the structure. If not, you will be tag in, tag out, and keep taking 1% loss. So based on using your testing data, you must understand how you're going to take this risk entry in high probability area, which is one of them is I'm not too aggressive, move my stop loss to break even, and I will wait for next correction, impulse to downward, then I move my stop loss above the structure. Next we move to the next pair, which is Kiwi Canadian dollar. This is very clean structure for the past few weeks. We forecast this pair many times for the past few weeks that we expect price to move to the downward from this area, and price did move to the downward. So if you pay attention closely about my forecasting past few weeks for New Zealand Canadian dollar, the price just moved to downward, and the correction is very predictable. If we study the price action from here, 1, 2, 3, price move to downward. If you take this area which is bull flag, you can set position, price correction. If you take another bear flag from here, you will sell off from here. If you didn't take this bear flag, price come back up to the upward and test another high, and if you sell it from here, price move downward, and there's another correction from here that you can sell off from here, then price move to downward again. So now we at this area. How we going to approach this correction and deal with this correction? So I will approach this similar that I approach this correction. I take this area of correction. This is similar kind of correction. If price pull back again, create a small double top, we zoom in a little bit. Price pull back, create another double top from here. I will sell off from this area. If price move to the upward, there's another point that we can take the sell off, and this is another point which is correction that I can price move to the upward, I sell off from here, or I will wait for price to sell off from this area. If you have the experience deal with correction and you want to capitalize big percentage, you need to have experience to sell off and deal with this kind of correction. So keep practice, stay in your lane, and focus what is your forecast. It's okay to miss out the trade. We always can be able to entry for the next future price movement. That's all for New Zealand CAD. We move to New Zealand Japanese yen. For this pair, it's actually quite a clean structure if you have advanced experience. So price pull back and sell off from this double top. We forecast this pair for past 1 or 2 weeks, and we expect price to move to the downward. We move to lower time frame. If you study this price action, it's quite similar with New Zealand Canadian dollar. Previous pair that this is double top, price move down. If you're able to catch this bear flag and this big bear flag, or this big the flag, if price test once again and sell off from here. Price want to touch but doesn't come up this area, so if you miss these two, you're not able to entry this area because price move down without touch this double top. We only trade if price give us confirmation. However, if you sell off from this area, you're able to gain small percentage from here if you manage aggressively, and this area. So price create another structure which is bear flag, and if we calculate the pips from here is about 70 pips, so we're not able to enter as a reduced risk entry. We zoom in. If we go to 50 minutes, draw one trend line from here. Price already create one small ascending channel, which is indicate, doesn't matter if you want to draw something like this or you want to draw something like this. It's based on your experience or ability. However, if we draw something like this, quite a clean structure. So there's a two possibility to enter this area. Either price move to downward from this, if you understand the flag structure, sell off from here, or price create another touch from here, sell off from here. We zoom out into our structure. If price doesn't sell off from that area, price able to sell off from here, sell off from here, or sell off from here. However, I will wait for any candlestick formation before I enter the position. If the price move without if price not triggered, I will delete the order and see the next possibility or next chances that to enter the market. So that's all for this pair. This is a quite advanced knowledge that I teach you, which is how to deal with the structure if the price already moved from the high probability area to the downwards or to the upwards. Both NZD, JPY, and NZD Canadian dollar, very clean, good example if you want to close very big percentage on this pair. Doesn't matter with other pair, but this is example that you need to learn if you want to close big percentage from the structure, big structure. So this is quite a high value knowledge that you need to take note, practice, find the evidence from the backtesting. Next pair we move to USD Canadian dollar. This pair we at the beginning of high probability structure. If you zoom out, you understand this is bigger ascending channel. There's a possibility price to move downward. However, if we understand price structure, price able to create another third touch from here and sell off from here. So in FX Capital, we capitalize downward and upward, but we understand the possibility and probability. So that's the way you able to catch and capitalize all the market movement. We keep our 1% risk in table, we jump into our analysis, and we capitalize all the movement. That's the way you trade professionally. We move to 1 hour time frame. Price already create one small descending channel and have possibility to move to the upward. So price already pull back from this area and break this structure. If we count the pips from here, is any possibility we can enter this entry? No, this 97 pips is too big for us. Then I will is the price. We zoom in a little bit. So if the price move to downward, test this area, and I will buy position from here. There's so much room to the upward if you're able to capitalize using the knowledge that I gave to you previously from the previous pair, New Zealand CAD and New Zealand Japanese Yen. Sell off from here. It's about taking about 25 pips. There's so much room in this area if you're able to deal with the correction. Price not going to move straight to upward. There will be correction in between. But in FX Capital, when the people see a mess, we see the opportunity in between. If you study this previous structure, this is bear flag towards to downward is bigger, back flag towards downward. This is quite big bear flag to the downward. When the people see a mess, we see the opportunity. All the structure that you collect evidence, you will see that as an opportunity to enter the position. So there's so much room to the upward. It's about 62% if you're able to capitalize the whole movement. But don't get too obsessed with the structure or percentage. We focus on the strategy itself, that we understand the price at the high time frame is a ascending channel and able to move to the downward. Next we move to our wildcard. First wildcard will be Euro USD. Euro USD already break descending channel, price move to the upward. This is our minimum target with 90% rules. We zoom in here. We target my price to move to the upward. In 1 hour time frame, price create one big structure, move to the downward, create one bear flag. If you study last week forecasting, that we did forecast price to move downward, but from this point, from this area, we forecast price move to, however price move to upward, then move to downward. If you study the previous forecasting, I think 2 or 3 weeks back, that I teach you that price will break up and move to downward, create structure, then we enter from this structure and sell off from that. If you remember that mini lesson, price did show that if you're able to entry at this area, is a quite clean structure. Price create small double top from here and sell off from here. This is just a one big structure and sell off from here. So if you still not close your position, you just keep going and trailing your stop loss. But we have high probability price to move to the upward again. So in this area, I will set entry from here to buy position. Buy position from here. can see I will wait see how the price approach this in impulsive way. If price break, I will wait price to move up again and buy from here. If price move to the downward without retracement, I just let the position move to the downward. Okay, we keep it simple for the wildcard. This is a valid entry because price is not at the top or below a structure. It's in between of structure. So be extra careful with possibility and the high probability. Keep your 1% in place. Nothing will go wrong. Just accept the loss, move forward and see the other opportunity all cross the pair. Next we move to Australian dollar, Japanese yen. This is one of high probability area. Price has the possibility to move through downward. In 1 hour time frame, price create ascending channel. Last week forecasting, we expect price to make touch from here. Price did not. Price just moved to downward. But I did miss the opportunity to enter from this area. Sorry, this area. Price create one double top from here and sell off from here. Now price create one structure. If the price come back up and touch this point, one touch, second touch, I will sell off from here. Stop loss above the structure. Wait for 1 hour retracement candle or any candle shape formation and sell off from here. So we have so much room to the downward. This will be our minimum target. If price did move to the downward, it will be massive percentage, about 20+%. If we scale in between, it will be multiplied with the structure. So be extra ready. We're going to have a big massive move for the few weeks. So for last pair, which is USD CHF, price approaching this third touch, which is one touch here, second touch here, and third touch from here. If price move the third touch, I expect price to move to the outward in 1 hour time frame. So price already one touch, second touch, price at the 1, 2, 3. So I let price to move downward. We buy it from here. Or price to move to downward, make the touch at a high time frame trend line and buy from here. So if you're able to enter it from here, the stop loss is about below the structure. Example, you take 50 pips is maximum stop loss. To the upward is about 14%. If you scale in between, it will be massive percentage. So don't be greedy, don't too focus with percentage, focus on the strategy, how to enter the market precisely, how to spell it precisely. Yes, precisely. So that's all for forecasting for this week. It's a massive indicator price action show in the market abroad. We just need to get ready to capitalize the market. Keep your routine in place, keep your discipline, clear your head, deal with the challenges in your daily life, so you will see the market very clean structure. Remember, when people see a mess in FX Capital, we will see opportunity. That's all for this week. Thank you guys for watching. Subscribe with our YouTube and follow our Instagram. That's all. Thank you. Bye.